Hello friends, today's topic market correction after 14 days, 3 reasons. I am Dr. Bharath Chandra. Purpose of the video is financial education of society. Yesterday night, the US markets fell between 2 to 3%. The weakness continued in the Asian markets today morning with Japanese and Taiwanese markets down more than 4%, Korean markets down by 3%, Hong Kong market down by 1%. Due to this, Indian markets also fell slightly by around 0.3. Today, it was down around 0.8%. So our markets have relatively done much better than the other global markets. After 14 days of positive close, Nifty closed negatively today. Some of the reasons of the weakness are as follows. 1. Fear of slowdown in US economy. Once again, the fear of US economy slowdown has come up due to lower than expected quarter results of the few top companies in US. This is observed especially in US technology companies. Some economic indicators are indicating a fall in US GDP growth. 2. Profit booking in Indian markets. As such, due to 14 days continuous rise in Nifty, slight correction was expected anyway. Also, September has been historically a negative month for Indian markets. Due to the positive performance in the last 2 months and markets reaching new lifetime highs, analysts have been expecting some correction to reduce the momentum in the market. Third reason, valuation of higher than 10-year average. Analysts have said the recent rally to 25,000 for Nifty have pushed market valuations to a new high. Nifty 50 index is currently trading at a 1-year forward PE ratio of 21.05 times. While it is close to the 5-year average of 20 times, it is trading significantly above the 10-year average of 18.21 times. Forward PE ratio considers the PE ratio based on the analyst estimates of the next year profits of companies. Brokerage company Macquarie finds the financial sector, particularly banks and diversified financial companies, telecom, automobiles and materials sectors to be attractive. On the other hand, utilities, healthcare and industrial sectors are less appealing due to the rally in these stocks already. Brokerage firm Morgan Stanley sees several potential triggers or reasons for a market correction, but it does not view them as significant enough to derail the ongoing bull run. As per Morgan Stanley, the bull run has only crossed the halfway mark and it could continue for some more time. Also, Morgan Stanley has highlighted that the market not falling much in spite of weak global cues is due to the strong participation of retail investors. It expects more and more retail investors entering the market in the coming years and also a higher percentage of the savings of the Indian households being in equity related instruments such as stocks or mutual funds. Morgan Stanley prefers to look at large caps over small and mid cap stocks currently. In terms of sectors, the brokerage is overweight on financials, technology, consumer and industrial sector. The 25,000 mark will be very crucial for the Nifty. If it can hold that level, then the uptrend will be intact. Otherwise, there is a chance of further correction as per analysts. End of the video, here is a question. Did you invest some lump sum amount due to the market weakness today? Yes or no, you may type. In case you are not the member of this channel, this is the time to subscribe. Press the bell icon. Send the video to all your friends. The video is good. Press the like button. Thank you for watching. Bye bye. All the best.